Hey, happy Monday, everybody. Paulo Brantz with your Monday market update. Hope you had a wonderful weekend. There's a couple things that you're going to notice if you're out there looking at houses is that we're starting to see a pickup in activity of people going to open houses. We're seeing multiple offers again. Also, if you're watching interest rates, especially over the last couple of weeks, you're starting to see interest rates kind of tick up. So in this video, we're going to talk about why that is, what to look for this week, because this could be a really impactful week for interest rates, good or bad. And then secondly, we're going to talk about cost of waiting. And then also we're just going to have a little quick chat about the Feds and their change of thoughts as it relates to interest rates cut. So first, let's go ahead and bring up today's average interest rates. What I love about bringing this up, this is the average interest rates of the market. If you take a look at our rates in the email there or in the description, you can notice that our rates are lower. Just going to say that there, put that out there. But I also want you to bring your attention lower to the highlighted section there. It says, as a result of the market's pricing. So we're talking about the job markets, which we're going to get to in a second. If you go back to our videos about a month ago, there was an 80% chance that the Feds were going to cut interest rates by 0.25% in June. As a result of the change in the market, now we're down to 50 to 48% chance. So there's that inflation thing that is just really keeping interest rates up. Because if you remember, I've said this a million times, inflation is the kryptonite to 30-year fixed rates. Before we go into the job market, I do want to kind of switch gears for a second and talk about the cost of waiting. A lot of people that I talk to are saying, we're just going to wait till interest rates come down before we get in the market, which sounds like a great plan. But here's the thing, even with these elevated interest rates, we are still seeing appreciation in the in the housing market. In fact, here in Marin, over the next year, we're anticipating about a 5 to 6% appreciation mark. Here's the thing, great wealth can be created from single digit appreciation, and it's something you don't want to miss out on. So here's an example. If you were to wait a year to buy a house today, in this example, I think it was $900,000 purchase price. Ooh, I didn't write that down. So let's assume a $900,000 purchase price. If you waited a year, you will have a lesser payment, but you're going to end up paying about about $57,000 more as a result of appreciation. And then remember, the next year that you rent, that money's just going away. It's paying somebody else's mortgage down. Wouldn't you rather pay your mortgage down? So that whole date the rate, marry the house thing, that's where that comes into play here. So if you have any specific situations that you want me to run this for you, I'd be happy to send it out to you. My job is to make sure you have all the information to help your clients or you and your family make a great decision as it relates to when and where to buy a home. Let's go back last week. Let's talk a little bit about the job market here. BLS reports came in. I want you to notice, remember we were talking about one of the things that the Feds were focusing on is unemployment rate. Unfortunately, for rates to go down, unemployment has to go up. Well, last week for the month of March, employment actually went down, and that pushed interest rates on up. Now, what also didn't help was the ADP report that came out that showed even a bigger market, more jobs than anticipated at 184,000 were created. When you have those two working in tandem and the Feds are so focused on it, that's why the Feds are now went from 70 to 80% rate reduction in June to about a 48%. And that's why you're also seeing interest rates kind of hike up here a little bit. This week, Tuesday is the NFIB Small Business Optimism Index. Wednesday's Mortgage Apps Consumer Price Index, right? That's a measurement of inflation. That's going to be huge. The Fed minutes from the March 20th meeting, that's going to be market moving. Thursday, initial jobless claims, producer price index, 30-year auction. And then Friday is going to be Michigan sentiment. This is a packed week in terms of interest rate movements. If you're going to be out there looking at houses, got to make sure we're connecting. We're keeping you up to date on what the rates are doing because we don't like surprises, either do you. In fact, if we never met and you want to set up an appointment, let me know. I would love to connect with you. Scan this QR code. It's called a Hopes and Dreams Conversation. If there's not a time that works for you, to send me an email. Would love to connect, give you advice, put a plan in place. Let's help you and your family or you and your clients get a home and this is going to be a great day. Anyways, I'm rambling. Paul Brands, Clear to Close Brokers. Hope you have a fabulous week. See you next week. Take care. Bye now.